That is a major breakout for silver. It says to us that the congestion of the last year is over. We're again resuming upside for a variety of reasons. I won't go into all of them, okay? I think silver in the next 3 to 5 months is likely to be up in the $60 to $70 range. The last 3 to 5 months, and this is not the final surge. And don't make a mistake about that. This is a surge that gets us up out of here into a new reality. And I think it's likely to carry us well beyond the 50 into the 60, 70 range. I can't be more precise than that right now. And I think it's going to occur in the next 3 to 5 months. And that won't be the top, but that's going to be your next major step. And I think it's going to turn a lot of heads.
A growing chorus of influential market voices believes it's not a matter of if, but when silver will hit its all-time high of $50 an ounce, a level not seen since April 2011. Veteran market analyst Michael Oliver, founder of Momentum Structural Analysis, delivered a striking forecast. Silver is on the cusp of a rally, and this marks the end of a year-long consolidation and signals a significant bullish move, potentially taking silver to the $60 to $70 range within 3 to 5 months. Silver has gained nearly 9% over the past week, outpacing gold's movement. The metal broke out of its earlier range and now trades above $36.05 per ounce globally, a level last seen in over a decade. Data indicates that silver's recent surge has been driven by a combination of factors, including a sharp decline in the gold-to-silver ratio, which has fallen from historically elevated levels near 100. This shift is attracting investment flows from gold to silver. Investor interest in silver has also been bolstered by its growing role in the clean energy sector. The Silver Institute reports that silver's demand in solar panel production has doubled from 12% of total demand in 2022 to 25% in 2024. Projections from Sprott indicate that by 2030, annual silver demand for solar applications is expected to rise to 370 million ounces, up from 220 million ounces today. Oliver emphasized it's going to shock a lot of people, especially those who sold out too early whenever silver dipped over the past few years. He also mentioned that smart money, investors who understand the bigger picture, are beginning to rotate into silver. Although silver has lagged behind gold recently, it's starting to move in a significant way, much like it did during the bull runs of 1979 and 1980 and 2010 and 2011. Back then, silver dramatically outperformed gold in a relatively short period. We're about to explore the video, but first, be sure to subscribe and click the bell icon to stay up to date with our latest uploads. Your feedback in the comments is always appreciated.
Price action since May of last year, if one pumps up a price chart, go back to May of last year, you see silver hit 32.70. You just draw a line sideways through a year of action. We got up to 35 twice after seeing that 32.70, but basically we oscillated in wild swings either side of that 32.70 level. And in early April, we had a plunge that cleaned out anybody who was weak. They screamed and ran. Okay, got down to 27.50 in 2.5 days from 35 to 27.50. And within a few days, you're back up in the 30s again. Okay, so that shouldn't have happened, obviously. It was a bear trap, as we said it was. When you look at price, there's this erratic behavior, and it took like getting up well over 35.5 to take out those 2 prior highs. But when you looked at momentum of price, we had a perfectly downtrending channel that you could, if it were a price chart, people would say, oh, that's a nice channel. You know, if you break out of the top of it, you're running. That breakout occurred at 34.90. That is a major breakout for silver. It says to us that the congestion of the last year is over. We're again resuming upside for a variety of reasons. I won't go into all of them, okay? I think silver in the next 3 to 5 months is likely to be up in the $60 to $70 range. In other words, the $50 highs were phantom anyway, because when we got up there in 1980 and 2011, it was like for a brief few days or a few hours even. You know, so it really wasn't a reality. It was just whoosh, boom, and then down. Those old highs don't mean much. To some people, they do, because they go, oh, you make an all-time new high, big deal. But in real dollar terms, those are meaningless. If we match the real dollar valuation highs of 1980 or 2011, it'd be probably $100 silver. Okay, because of the decay in the money supply and what the dollar means now versus what it did then. But anyway, right now, I think that we're about to go into a surge that lasts 3 to 5 months, and this is not the final surge. And don't make a mistake about that. This is a surge that gets us up out of here into a new reality. And I think it's likely to carry us well beyond the 50 into the 60, 70 range. I can't be more precise than that right now. And I think it's going to occur in the next 3 to 5 months. And that won't be the top, but that's going to be your next major step. And I think it's going to turn a lot of heads. Like, what? How come I missed that? Why? Because you got out every time silver flinched in the last few years, you got out, and that was a mistake. something we tried to keep our subscribers between now and this fall, later in the fourth quarter sometime. I think there's also some smart money that has done their homework, and they look at valuations, one asset versus another, and they see that despite silver lagging gold over the last couple of years in terms of its percent gain, it's moving up. Okay, you can't deny that fact. Yes, it's irregular, 2 steps forward, 1 back, or 4 up, 3 back, that kind of thing. Whereas gold doesn't drop as much on drops. But when silver engages like this, and has done this same thing, technically speaking, back in the 79 to 80 move, and also in the 2010 to 2011 move, where silver woke up far more dramatically than gold and engaged to the upside in a startling way. It wasn't startling if you did your technicals right, but it was startling to most people who didn't expect it. And when that happens, people tend to panic into that market, chase it. And when a market is run out of sellers, basically, those who might have wanted to restrain it, okay, and they quit, and suddenly public money comes in chasing it, that's when you get the wet bar of soap phenomenon. I think that's where we are now.
The US dollar has had a rough year. It's down nearly 10%, hitting its lowest point since April 2022. Ongoing concerns, such as trade tensions and weak economic data, are exacerbating the situation. Big firms like Morgan Stanley are now predicting that the dollar could fall even further, by another 9%, which would take it down to levels we haven't seen in years. At the same time, even though the stock market has shown small gains, it's not exactly a strong rally. According to Reuters, analysts are cautious, and the big tech names, such as Nvidia and Microsoft, aren't leading the way as they usually do. Michael Oliver believes this isn't just a series of random events. He sees a much bigger shift happening. He says the global landscape is changing rapidly, with significant shifts in the economy, markets, and monetary policy all co-occurring. To him, the weakening dollar and cracks forming beneath the surface of the stock market are warning signs. And it's no accident, he says, that silver is starting to surge right as the dollar begins to crumble. He thinks the two are directly connected, and this could be just the beginning of a much larger move across asset classes. Now, let's redirect our attention to a video.
We're in a different world now. We're not in the normal bull market of 80 or 2011 gold and silver. The events that are going on around the world in terms of markets, economics, monetary stuff, and now something we'd predicted months ago before Trump was even elected. We said if he were elected, it would be, at some point, it would be uncopacetic in the streets. Not that it was uncopacetic to have that outcome. It was just that what would happen would be perceived as, disturbing ultimately, and it would show itself in the streets. And I think that's just begun, but that's not a causal factor. That's just an echo effect. Big things are happening in some big markets that will further impact what the monetary metals are doing, meaning go up, but then suddenly go up more and more accelerated. And that is, there's 2 markets in particular we're watching. And one, I think the stock market's topping. Okay, we thought that back in late last year, and I say the same thing now. Do not trust it. If it makes a new high, don't believe it. First off, if you look within the stock market, you'll notice that your leadership is gone. Nvidia is still up there, and it hasn't even made a new high, and Microsoft. But you go through the other big 7, and suddenly, what's going on here? I'm where I was in 2022. The leadership is fragmented, and too many sectors aren't participating in this. Too many key sectors aren't back at their highs. So don't trust it. Momentum says you made a big stumble in the first quarter of this year that can't be shrugged off. Whereas you could try to rally and even maybe make a teasing new high. The major momentum trend is now negative. Okay, now, but more important than that, the dollar. When you measure the dollar versus the euro or the yen, they're 2 pieces of fiat stuff, who cares? But that's what we measure when you look at the dollar index. And the dollar index made a high in 2022 up at 115. But then in 2023, it collapsed down to 100. And then for 2 years, the dollar index went between 100 basically and 108. Just up and down and up into 2 full years of nothing, where it really wasn't creating any waves or consequences. It was just Dollsville. A lot of volatility elsewhere, but not in that market. Talk about degrading your money. We know that. We know they pump, it's paper. It's like the Weimar Republic. Okay. That stock market's just blowing off the page. You say, gee, I should be in that market. Yeah. You probably it buys fewer loaves of bread now than it did 3 years ago. Okay, even though it's going off it's meaningless, in other words. So sometimes when people focus on just the nominal price of something, they're missing the point. It's degrading in real value, whereas monetary metals over time hold their value. And I think there's a re-realization of that now among a lot of investors that, gold's been doing well, not just nominally, but it's been holding its real buying power. And silver's lagged. We know that. When we study the relative performance of silver to gold, we know it's at very, very low historical levels. Okay, it was under 1%. In other words, a lot of people do it the other way. We just divide an ounce of silver into gold, express the answer is a percent. Silver getting down to under 1% of the price of an ounce of gold is very low historically. You can go back and find instances of it. And by the way, whenever you did, you want to be a buyer of silver then. Okay, it's now up to 1.1%. So it's gained, some in the last month or two. It's starting to reassert itself. Same is true with the gold miners. The gold miners, on a relative basis to gold, have been basing and actually firming up over since 2015. The bear low in all the metals, they've appreciated actually a bit more than gold. It's hard to believe when you look at a chart because it looks so irregular. But actually, if you'd bought GDX in December 2015, you're doing better than if you bought an ounce of gold. Okay, but they look like they're ready to now accelerate their resurrection. They're coming out of this vastly cheap hole on a relative basis to gold, and similar silver relative to gold. So not only is silver broken out of a momentum situation that says it's about to shoot up in a more dramatic way, but its spread relation to gold and the miners' spread relation to gold says the same thing. It says, we're waking up, we could jolt you in what we do over the next handful of months in terms of, wow, I wish I hadn't gotten out of my miners. Okay, I think that's where we are right now.
We're living in a very different world now. Not the kind of gold and silver bull market we saw in 1980 or 2011. Global economic, political, and monetary developments are shifting rapidly, with tensions rising and uncertainty spilling into the streets. Key financial markets are starting to show signs of deeper cracks. At the same time, silver is starting to regain its vitality. Silver, along with gold and mining stocks, is showing relative strength, signaling that a significant shift may be underway. This is not just a market correction. It may be the early stages of a larger financial realignment, where hard assets begin to outperform in a world losing trust in paper currencies and traditional markets. Do you trust fiat currencies to hold value in the next decade? Do you believe we are heading into a new financial era where hard assets outperform paper assets? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.